Good evening, traders, and welcome to another StockX Capital market breakdown. In this video, we're going to be sharing more of a live example of how the STX option trading model works. So rather than share our continuous wins, we want to highlight the education because I've been getting a lot of interest about this model, and I want to share it to the world and basically go over how it works. So this video is meant for those people that are interested in learning more about the model and are wondering how it can work for their overall trading journey. So I want to keep this video short and straight to the point and really highlight the model and how it works in a real world situation. Okay, so rather than tweet about it continuously, let's get down and do the full breakdown into this STX model that we have going on. So what you see right here behind me is the Discord chat. So our pre-market watch list, we basically give levels and not only on SPX but on other stocks as well of interest. We give like the premiums that we want, the entry for if we like a particular stock. Let's just say if I see Tesla looking bullish, I would say, hey, I like the 225 call at 1.5, and then I'll just set an alert or whatever the case might be. So we share a lot of that information. We also share watch for this premium if it goes above this amount. Like let's just say if NVIDIA 400 call goes above 5, that signifies that this is a very bullish stock. And besides that, what matters the most with the STX option trading model is our leveling system. Now, what you see right here is level 1 through level 3 bullish, and the same goes for the downside. Now, these aren't just any ordinary levels. These are carefully calculated levels that represent significant inflection points on the overall market. Okay, each level has a meaning to it. So for those that are new, just to reiterate things here, the level 1 represents basically the gatekeeper towards either the upside or the downside. So in the case of level 1 bullish, that represents the gatekeeping level towards the upside. So that's pretty much the key inflection point that will keep the market in range. Usually that's a good opportunity to play a rejection depending on what time it happens. So let's just say if the premiums are overpriced in the morning, that is a very good level to short the market. Okay, and sometimes if it does break through, you can see the next step up, which is level 2. So level 2 confirms the trend. Now, when you confirm the trend here, you want to be very careful in terms of playing the other direction, because once the trend is confirmed, like let's just say you get to that level 2 bullish, you want to focus on playing the upside rather than the downside. But you can definitely wait for the premiums to get cheaper, because usually at level 2 there is some sort of rejection and a dip where you can definitely find that re-entry in towards the upside. And level 3 is basically the carefully calculated level where we see as a maximum range either on the upside or the downside. Now, these option premiums are carefully calculated and they've been highly accurate. I've been able to show examples of this continuously over time. And the best part about the model is that it's adaptive to changing market conditions. So I calculate this, I share the knowledge about it, and the best way how to utilize it is to include it into your trading decisions, so that way you guys can make the best decision here. So what you see over here, for example, is that level 1 for today was 42.94. Okay, so that's a gatekeeper, and that can either be a good opportunity to short or play towards upside. But most of the time, it's to play the rejection, depending on what time it is. So if it's happening in the morning, then that will be a good opportunity to definitely short that rejection. If it's during midday or whatever the case might be, then you can look for opportunities to continue to play the upside. And our level 2 bullish was 43.02, and level 3 43.10. So if you're looking at the upside and you're looking at, hey, I like the 43.10s, like I like the 43.40 call, let's just say, for example, and they're trading for $3, I would say, hey, hold your horses. That is outside of the range. That our top range is 43.10. So if you have a small account and you looking at a $3 play that it's outside the range, it's very likely that that's not going to happen. So stay away from that range, and this is why this model works for small accounts and for anyone that's trading on a budget. Similarly, goes towards the downside because you don't want to play any excessive premiums that are going beyond 42.68, right? So, today, for example, I mentioned my morning call, the 42.50 puts were going for $1, and that was outside of our level 3 bearish range. So it's important to see that if those are going for a 1, then you know that most likely it's better to wait for a 42.70 put to go to 50 cents or even $1, and that will be a better opportunity for you to trade that. Now, besides that, these are the numbers which you see here, and let's see how it reflects the market here. This is completely timestamped. There's no idea of any sort of edit. You can see right here that these numbers were given at 9:04, 30 minutes prior to earnings. 30 minutes prior to market open. So that is very important to know. And this is not Photoshop. This is not edited. Just to give you a clear idea of that and to highlight the accuracy. Okay, these are not just any other ordinary levels, guys. These are derived from my calculations on option premiums. Now, what you see over here, so right over here at 42.94, that is our level 1 bullish. Okay, so right approximately at 10 a.m., we seen that rejection at level 1 bullish. Now, sometimes we do see that the model does go a little bit beyond, but it didn't touch the level 2 at all. Okay, so pretty much the high of the day was near 4,300, and 43.02 did not occur at all. Okay, so that was the high of the day. There was a little bit of turbulence around that level, as you can see here. Let me just widen this out. A little bit of turbulence at that level 1, and it's quite interesting to see that here. Now, the thing that matters the most, what you see here, is basically the point in terms of when we see that level 1 bearish here. Okay, so the market did decline all the way to level 1 bearish. Right over there, there was a little bit of pop, a little bit of resistance, and this is of course on the 5-minute chart. We've seen that the market was pretty much turbulent there and very choppy, and then eventually it did break down where this right here at 42.72 was our level 2 bearish, and the market still traded in range and then eventually broke down here. Okay, now level 3 bearish once again is our lowest bottom range. We've seen that happen here. So far the model was off by 5 points, but you get the point, because this right here was the market held that level very well, and in a very short period of time it picked back up and was trading between those 2 ranges. You can see over here, this is where the market closed, literally right at my level 3 bearish. Okay, so the market closed exactly at 42.68, and if you go back on my Discord, that is the key range that we've seen on the bottom. So interesting to pretty much see that. So I wanted to highlight that in the Discord, and I'll continuously do that as proof and evidence. I've been doing it a lot on Twitter to showcase that, hey, you can accurately predict the market as long as you guys are prepared and have a concise trading model. So I've been using this for 3 years so far, and it has been working to the T. And I look forward to growing my community and sharing this so that way you guys have the informed decisions on how to work. Like I said, guys, each level means something here. Okay, we were off by a couple of points, and that happens sometimes. But overall, we closed exactly at our lowest range, and we didn't break above that upper range, right? So this model has been very accurate. We can see that we didn't break, we didn't touch that level 2, because if we did, then it confirmed the trend. And here we've seen that level 2 touched here. So I told my team as well, be very careful trying to play the upside, because once that level 2 hit, the trend was there and it's going towards the downside. And because the trend was there and the levels weren't so far apart amongst each other, there was a lot of support within these small ranges. I didn't feel the need to play anything. I sold my Tesla calls right at open, and we know it's a chop market, and this leveling system gives us the full guidance from the beginning of the week. I can tell you exactly what I feel is going to happen, and that really gives us an accurate prediction on what's to come, because pretty much the market makers hedging activity all comes down to how they set their option, how they set their collar and all of that. And I look into that, and pretty much that's how the market trades. So I hope you guys found this is very informative into the model. If you guys are interested in learning more and need a private consultation, there's a link in the bio. Alternatively, our free Discord is also available. And, I give a lot of high-level trades only when the opportunity presents itself in the free Discord. And in the premium Discord, that's where I give the constant market updates. I'm live on voice, and I do all of that. So thanks for tuning in, guys. I look forward to the next one.